The SpaceX IPO was the largest wealth event in aerospace history, instantly turning thousands of engineers into paper millionaires. But a ticker symbol blinking green on a screen differs from having usable cash in your checking account. The IPO triggered a rigid 180-day staggered lockup clock, during which 0% of employee shares can be sold. In August and September, the first narrow windows open, releasing two small 7% tranches. By October, a conditional 28% block clears, followed by the rest of the shares finally hitting the market in December. Surviving this 6-month waiting period requires you to manage this windfall as a complex legal liability. You've spent years tightening bolts and running numbers to make this happen. There is a strong psychological pull to hold on to every single share because you believe in the mission. But leaving 50 to 90% of your entire net worth tied up in one single stock is dangerous math. Your salary, your career trajectory, and your unvested future grants are already completely exposed to this one company's performance. One delayed launch, a bad earnings call, or a broad market correction can wipe out a decade of wealth on paper before you have a chance to sell. Diversifying vested shares provides financial resilience, a protocol that ensures you can survive outcomes you can't control. Your brokerage account holds 4 distinct equity types with different rules. Most are restricted stock units, which vest strictly on an employment timeline. The moment they vest, the IRS treats their fair market value as ordinary income, even if you haven't sold a single share. SpaceX withholds taxes at a standard 22% rate, but in California, your combined tax rate can easily reach up to 52%. That massive gap often creates surprise 6-figure tax bills due the following April, forcing you to liquidate shares just to pay the government. If you fail to plan for this hit, the IRS tax calendar, not your own goals, dictates your financial strategy. Incentive stock options require you to actively buy the shares. Exercising avoids upfront ordinary income tax, clearing a path to long-term capital gains. But there's a catch. The spread between strike price and market value triggers the alternative minimum tax. You must pay this AMT bill out of pocket in cash long before the lockup expires and you can sell stock to cover it. ISOs offer a distinct advantage for building generational wealth, even though they create a significant cash flow trap during the lockup period. You might also have shares from the Employee Stock Purchase Plan, acquired through payroll deductions at a 15% discount. Selling these shares out of order or too early destroys that tax advantage, converting the discount back into ordinary income. To navigate these windows safely, your primary defense is a 10b5-1 pre-planned trading schedule. By locking in sale dates before trading windows open, you remove the emotional temptation to time the market and gain protection against insider trading risks. For veterans holding large positions, another tool is the exchange fund. This strategy allows you to pool your concentrated stock with shares from other companies to achieve an instantly diversified portfolio. This approach defers your tax burden rather than eliminating it, and it strictly requires a $1 million minimum entry. Think of these strategies as mandatory protocols designed to protect the wealth that would otherwise be lost to tax inefficiency. Your playbook depends on your equity mix. Veterans holding over $1 million in ISOs and NSOs use exchange funds for tax-free diversification and options hedging for lockup protection. Rank and file with RSUs and ESPPs use a 10b5-1 plan, sell 20%, drip 60%, hold 20%. Attempting to use the wrong persona's playbook is the fastest way to trigger irreversible tax penalties. Managing public equity requires the same obsession with contingency planning and precise math that it takes to engineer aerospace hardware. Calculate your actual tax liabilities, map out your specific equity stack, and formalize your selling rules before trading windows open and emotions take over. The original mission was getting to orbit. Your new mission is ensuring the people who built the rockets actually retain the wealth they earned.